Yes. Welcome back, guys. This one is the second session of the ninth day of the tax fast track course. If you're watching it recorded, these are some links which you should access: the fast track course and the Google Drive link for the quick book, the material, the question bank, and everything else. My name is Saurabh Mutha, and we're looking at the fast track course. We're on the ninth day. We've already finished GST for the first 4 days, and we are here doing DT. Today, tomorrow, and day after tomorrow are the final days. Let's look at the agenda. 10A, very small agenda here, then salaries, and then rates of tax. Three things that we need to do. And when we do computation of income, you will also do deduction sums there, guys. Deductions are always a part of a bigger question, so we'll see it there. But right now, 10AA on my mind, 10AA on my screen. Guys, there's a section called section 10A, which I call awesome area. But why is it so awesome, and what is this area? Let's understand. This area is basically an SEZ, special economic zone, which is nothing special, honestly. It's just a dedicated area where you do economic activities, just like how in your house there's a dining table, which is a dedicated area to eat. So SEZ, if you are basically located in the SEZ, is that the advantage? You just need to go there? No, guys, you need to export from there. And if you export from there, the government gets tears in their eyes and they tell you that, listen, we will give you a deduction under section 10AA. People confuse this to be a exemption because of the section 10, but no, this is a deduction. What does this mean, guys? Let's say you are in an SEZ unit, and in this year you have export of 40 crores plus you have 60 crores worth of domestic sales. So basically you have 100 crores worth of total sales. This is 100 crores worth of total sales, and on that you have a profit of 10 crore rupees. This is your profit, this is profit. Now I'll give you a full idea about what happens. First, forget 10A, forget that this is export, this is SEZ. Just like any government, do you want to tax this profit? Yes. So in PGBP, this 10 crores will be parked, and the government would want to tax this 10 crores. Yes, in which room they will want to tax it? In PGBP. The 5 rooms come together, clubbing set off happens, and this comes into GTI. So in my GTI, I will have other incomes also, and this 10 crores. Now the government says, thank you for doing export from an SEZ, and because of that, I want to give you a deduction under 10AA. How do you calculate the deduction? First, step 1, you always calculate your export into your profits. I call it export profit. What is the export into profit? How much is your export percentage? 40 crores divided by 100 crores. That means of my entire business, 40% is export, and hence into the profit of 10 crores, which is basically 4 crores. Do I have to calculate this every time? Yes, every year you need to calculate your export profit. What is export profit? Export percentage into your profits. Export percentage is how much did you export, and into your profits it is 4 crores. So, and step 2, you have to decide which year are you in, because this benefit of this export profit deduction is given for 15 years. If you're in the first 5 years, you will get 100% of this. So assuming you're in the first 5 years, the year you start manufacturing or start taking this 10A benefit, if you're in the first 5 years, then the entire 100% deduction you will get. So if your answer is 4 crores, 100%, that is 4 crores, you will get a deduction. In the next 5 years, again, you will get 100% of 4 crores only? No. Every year you will calculate. And let's say you're in the 7th year. So 7th year you calculate your export profit. So every year you have to do both these steps. Yes. And let's say that year your profit is for some reason 6 crores. Then for the next 5 years, my bad, it is 50%. So 6 crores into 50%, that is 3 crores will be the deduction. That means, guys, every year, just like you do a lot of things annually, this calculation also has to be done annually. Step 1, calculate export profit, and whatever that export profit is into 100% or 50% for the first 5 years and the next 5 years. But this deduction and this benefit does not end in 10 years. In the next 5 years also, that means overall total 15 years, again you will get 50% provided whatever profit deduction you want, you have to put that money aside. Example, let's say we are in the last 5 years, the 12th, 13th, 14th, 15th year, and your profit is 6 crore rupees, your export profit, then 50% of that is 3 crore. Do you want a deduction of 3 crores? Yes. So then put this money aside into an account called the reinvestment reserve account. Basically, you're in the last 15 years, you need to reinvest in your business, you need to basically grow your business. So this reinvestment reserve account, you need to put your money into. This is the section, yes. Guys, there are 1-2 small points here which you need to keep in mind. Step 1, step 2, I hope you know. Now, guys, whenever you export, there are 3 expenditures called FIT. It's a shortcut. Freight, basically sending the goods abroad. Insurance, insuring the goods which are being exported. And telecommunication charges like telephone, etc. These 3 things have to be excluded both from the export turnover also, you have to minus it, and from the total turnover also you have to minus it. So example, your FIT is 5 crores. Then 40 will become 35 and 100 will become 95. This is something that you have to keep in mind, that the FIT expenditure has to be excluded. But excluded from where, guys? From both export turnover also and total turnover also, from both. That is section 10AA. We are doing an examination sum on this, but quick recap on 10AA, guys. What is 10AA? It's an awesome area. What is an awesome area? It's an SEZ. If you go to the SEZ, no benefit, but if you export from the SEZ, benefit. How do you calculate the benefit? Every year you get the benefit for 15 years. So every year calculate step 1. Step 1 is basically export profit. You calculate that and into 100% for the first 5 years. Every year you have to calculate export profit into 50% for the next 5 years, and last again 50%, but provided you put that much amount in the reinvestment reserve account. But what if in the last 5 years you put only, out of 3 crores, only 2 crores you put in the reinvestment account reserve, then you will get deduction of only 2. What if you put 3.5, still you will only get 3. So 3 is the maximum, or 50% is the maximum, but you will get it only if you put money in the reinvestment reserve account. This account has to be used in 3 years for reinvestment purposes. That all CA final will take care of. And FIT expenditure, that is freight, insurance, telecom, on the export turnover has to be excluded from both export as well as total turnover. That's your section 10AA. Let's have a look at an exam question on this. Here we go. We'll look at 2 exam questions on this. So perfect. The first one is here, guys. Xavier has a unit in a special economic zone in the financial year 15-16. Guys, 15-16 basically means, and this was the year 18-19-20. So 15-16, 16-17, 18, 19 and 20. So you were in the first 5 years. Yes, you were in the first 5 years as per this question paper. Now, first, don't have to do anything. Whatever is the profit of the SEZ business, this 50 lakh rupees will go in my PGBP. Yes, it will go in my PGBP. Do I have to minus it now only? No, 10A deduction you will not get now. It will come to GTI, and from GTI you will minus 10A deduction. Let's calculate export profit. What is the export? 90 lakhs. What is the total? Domestic is 60, so total is 150. Into profit is 50. So let's do this, guys. This will turn out to be 30 lakhs. Now we are in the first 5 years. So step 1 is export profit, which is 30 lakh. Into how much percentage, guys? We will get into 100% because we are in the first 5 years. So how much deduction will you get? Deduction under 10A is 30 lakh. This is as simple as this. How do you present this? Nothing. In the PGBP, take 50 lakh. Let it come to GTI, then 10A, take 30 lakh, and this write a working note 1. And in the working note 1, you have to present like this, that the SEZ business is in the first 5 years of operations, full stop. As per section 10AA, 100% deduction will be given of the export profits calculated as under. Export percentage into profits, that is 90 by 50 into 50, that is 30 lakhs, 100% of that will be given as a deduction. That's all you need to put in. Another question is waiting for us here, guys. Let's check. There's one more question. Yes. Guys, here is another question. There is another person, Mr. Ganesh, who has an SEZ. Over to you all. Please try and calculate what will go to my PGBP first. I want that answer. And second, what will be my 10A deduction? I want both the answers. Over to you all. Please try this. This is the first 5 years because it started in 2017-18. How much will be my PGBP profits, guys? Alright, so profit from the industry is 25 lakhs. So in PGBP, 25 lakhs will go. Very, very simple. And then it will go to GTI. And let's see, first step 1, what are the export profits? Total turnover is 200, which includes 140 from export. So 140 divided by 200 into profit is 25. So 140 divided by 200 into 25 is 17.5. And which year are you in? You're in the first 5 years, so deduction is 17,50,000. It is as simple as this, guys. Perfect. So this is 10A done and dusted. Keep it aside, guys. Done. 10A is much important. In fact, a 10A concept which got over in like 10 minutes is more important than salaries chapter, which will take the next 1 hour 15 minutes. So that's how how little salary is important. All right. So here we go. The next and the last head of income which we are going to unlock is called income from salaries. First up in the exam, is this important? The importance level is 1 on 5, and even if it asked, basics of salaries are asked. We'll see exam questions also on salaries, but very, very basic salaries asked in the exam. Guys, salary is only taken when there is a employer-employee relationship. I call it the master-slave relationship. If you've been my regular student, you know what is a master and what is a slave. If not, you know master is someone who dictates the terms and slave is someone who follows it. So master and slave is employer-employee. It's easier to pronounce as well. My reason for that is pronunciation. Next. Guys, you can have multiple employments. Yes, you can be part-time working with one person, part-time with also second person. So you can have multiple employments. Yes. And here, whatever salary is received, will you on cash basis tax it or on accrual basis? They are very smart. They don't let you choose the method of accounting. They say whenever it becomes due, that means accrual, or whenever it is received, whichever is earlier, it will be taxed. Example, right now we are in the 17th of August, and let's say July salary I have not yet got, but will it still be taxable? Yes, because it is due. Same way for the month of March. 31st March, let's say it becomes due, you get it in April, but will it be taxed in March? Yes, because due or received, whichever is earlier. Guys, sometimes you don't want the salary, so can you surrender the salary? Yes, there is an act called Surrender of Salary Act where the entire salary goes to the government, and in that case taxability stops. Yes, S for surrender, S for stops, no more taxable. But guys, if you forego your salary, example, no, I don't want my salary, you feed stray dogs with it or you give it somewhere, but guys, that is your decision, and hence whether you want to buy an iPhone or whether you want to donate it to street kids, that is your decision. So forego follows. That means even in this case taxability will happen, your taxability will not happen. Guys, the biggest shortcut for salaries chapter is SAP minus SEP. What is this? We'll see very soon, but this is SAP minus SEP. If you get these 3 or these 6 numbers, you will get your answer mostly in the exam. This is salaries which will be taxable. Let's start with SEP first, guys. What is SEP? SEP are 3 deductions and only 3 deductions which are given under the head of salaries. You already know house property, guys, 3 deductions. You already know capital gain, 3 deductions. Same way here also, SAP and SEP, only 3 deductions that are SEP. Let's first understand what is S. Every person in India, whether you're male, whether you're female, whether you are a CEO or whether you're a peon, every person in India gets whoever's salaried gets a standard deduction of 50,000 rupees per annum maximum. That means if your salary is 45,000, then only 45,000. But if your salary is 45 lakhs, even then only 50,000 per annum will be given as a deduction. Yes, I'll give you the sections later on, guys. Sections are very simple in this, but please remember in the exam, if they give you computed salary computed, then don't minus 50,000. But if they don't give you salary computed and they say salary is 10 lakh 50, please minus 50,000 standard deduction. This one is basically only for government employees. Yes, this deduction is only given for government employees, and that too only those government employees who get entertainment allowance. When I first heard entertainment allowance, I was pretty amused that what is this entertainment allowance? Can I go bowling with it? Can I watch a movie with it? No, entertainment allowance is basically given to you so that you can take your clients etc. out. That is the reason you get entertainment allowance, and entertainment allowance is first taxed. Surprisingly, so let's say your employer gives you 10,000 rupees entertainment allowance, it is first taxable in your salary, yes, but then you will get a deduction. Only government employees will get a deduction, which is least of the following. So there are 3 numbers, not very important, but I'll still put it. 3 numbers are 5,000, 20% of your basic salary, 5,000 per annum, 20% of your basic salary or the amount that you receive. So I'll just change this. Always first the amount that you receive. Let's say you receive 10,000 rupees, that, or 5,000 per annum, yes, or 20% of basic salary, whichever is less, yes. How will you remember this? Because guys, they are giving you a deduction they will always give you less, so whichever is less of these 3 amounts. Very boring deduction, guys, because only those government employees who get entertainment allowance, only they get a deduction. First up, in India, 20% are hardly government employees, and that too, out of that 20%, only 1% would have got entertainment allowance. So practically not used. Exam also not often asked. And last is, as in India, we cannot escape taxes, and there is another tax called professional tax. What is this tax? Just because you're a professional and you have a job, do you have to pay a tax? Yes, it's called professional tax. It's generally about 200 rupees a month, so about 2,400 rupees a year. Do you get a deduction? Yes, provided it is paid. Yes, guys, this is tax. So show me the money. That means you have to pay it, only then will you get a deduction. What if you don't pay it and what your employer pays it? If your employer pays it, then he's paid your liability, so it will go in Percocet first. But that we have not discussed yet. But will you get a deduction even then? Yes. Whether you pay, you will get a deduction, or whether master pays, still you will get a deduction as long as it is paid. Professional tax only on payment basis. Not important, very important. These are the 3 deductions. SEP. Quick recap. Standard deduction 50,000. This sounds good, but imagine for a CEO who's earning like crores or rupees, guys, 50,000 is a joke. Next, government employees get entertainment allowance. Only those people will get a deduction. Least of the following. You can see it, it's on the screen. And last is professional tax, which is only on payment basis, guys. I'll give you a small tip. In the exam, any tax, whether it's municipal tax or whether it's GST or whether it's professional tax, you have to pay, only then you get the deduction. Show me the money is for every tax, which is the government very smart. For the money that we have to pay them, they want us to pay, only then we get the deduction. But you don't have to pay tomorrow. You can pay till the year end. In PGBP, you can pay till the return filing due date also. Perfect. This is the 3 deductions. That's about deductions, guys. Out of 6 letters, 3 letters are already over in the first 10 minutes of our discussion. Alright. So now we go to the next 3 letters, which is SAP, S-A-P. These are 3 incomes, guys. First is salary. This is what we work for. This is what you're doing CA for. Many of y'all are aiming to get a job. So this is what your salary will be. Salary will be a basic salary, because you work in expensive cities like Mumbai, Bangalore, etc., you'll get a dearness allowance. Then you will get bonus every Diwali, probably every Christmas, probably, or you will get some commission if you do something well for the company. So all these amounts are taxable. Yes, like think like the government, everything is taxable. So they are taxable under salaries. Next, they might not call it salaries, but they might call it allowances. Allowances are like pocket money. The employer or your master might give you 50,000 rupees that, listen, you might need this money for traveling, etc. So they give you an allowance. Is that also taxable? Yes. Because if they had not taxed this, then I would never get any salary. Everything would be allowance only. Indians are very smart to manipulate, guys, and hence even allowances are taxed. And last, guys, if they don't give me money, because money is taxed, but they give me money's worth. Example, they give me a car, they give me a house, they give me medical benefits. The government says we'll value the car, we'll value the house, we'll value the furniture, and that is also taxable. So the government spares nothing and no one. Salary is taxable, allowances are taxable, and perquisites also are taxable. Perfect. So this is salary, allowances, and perquisites. Now it's time to go deeper into each one of them. Very simple, guys. And we'll take salary. Salary is an ocean. We will dive into it. We will score the marks and we will get out without getting bothered by the other extra things. Alright, so first I'm focusing on the S, which is salaries. Guys, this SAP and SEP is only a shortcut for you and me. ICI module, no book talks about SAP and SEP. Let's see what is salary, guys. Salary is whatever you get in money, monetary. So your basic salary, yes. Let's call it B. Just like we have a pet name, I have a pet name, I hope you have a pet name. This one also has a pet name. Basic salary is B. Next, there is dearness allowance, which obviously has a pet name already, DA, but we'll call it D. There is another dearness allowance which we will call OD. But what is the difference? This dearness allowance forms part of your retirement benefit calculations. Basically, if you are getting some leave salary at the end or some Provident Fund or some gratuity, it forms part of those calculations. So hence it is called D. And this does not form part of those retirement benefits. Hence it's called other dearness, OD. Next, guys, if you do something for the company, can they give you commission? Yes. Which is called, I'm going to call it C. Obviously commission is C, but there is some other commission also. What is this other commission? I'm going to call it OC. Again, what is the difference? Because they sound the same. OC is basically not given as a percentage, it is just directly given. So in the exam, if they say 1 lakh rupee commission received by you, then it is OC. But if they say 1% commission on turnover, which is 1 lakh received by you, then it is C. So please remember these shortcut, very important short forms. Guys, in real life also, lots of people call you by your pet names only. Same way in here also, most calculations of salary, whenever we say salary, 10% of salary, 50% of salary, we will mean three things: B, D, and C. So salary will mean basic salary, dearness, which forms part of retirement benefits, and commission, which is a percentage of turnover. So basically this is the main salary. No, every salary is the main salary, every salary is taxable, but this is the main salary for calculation purposes. Alright. And guys, every Diwali, Holi, Pongal, Christmas, I hope every month, can your employer give you a bonus? Yes. And his bonus also taxable, guys. Everything in India is taxable, even bonus is taxable. So this is all in the trajectory or in the salary, but they can be other names also, guys. Can we call them salary? Can we call them wages like we would do in costing? Or can we call it remuneration like we do in fancier annual reports, remuneration paid to directors? So all this is also salary as long as there is employer-employee relationship. Perfect. So please, if all of this is 1 lakh, 1, 2, 3, 4, 5, 6, 7, then 7 lakhs will go in my salary. Obviously 7 lakhs will go in my salary because everything is taxable. This is very simple on the S part. Let me check if there's anything else that we want to discuss in the S part. Perfect. And salary, as you know, guys, is taxable on receipt or due basis, whichever is early. The government is in a big hurry to tax you, so whichever is early. Next, guys, is A, which is allowance. All of us either have got pocket money, some of y'all still get pocket money, but I think this pocket money deal will get over when you start your articleship, especially with the Big Four. They pay you well. I remember the last time I took money from home was when my first articleship started. That was the last time I took money from home. After that, I have never taken money from home, not because of some ego issues, guys, just because it's a very good feeling not to take money from home. So these are allowances, and allowances are just like the pocket money. But here, instead of your parents giving you allowances, here our employer is giving you allowances. Now, if you ever think, though allowances, how can you tax it? But if you don't tax allowances, then in India, no one will get salary anymore. Everyone will call their salary allowances to tax it, to make it free. Guys, we live in a country where people who in railways, if you are above, I think 2 or 3 years or 4 years, you don't need to take a ticket. So even a 7-year-old kid will be told that you are 4-year-old only. So we live in a country like that where we try to escape everything that is chargeable. So here also, guys, if allowances are not taxed, then there's a huge loophole which people will abuse, and hence the government says nothing doing, I will tax allowances. And my shortcut is A for allowances, A for add. So basically you will add allowances. Yes, any allowance in the exam, if they give you medical, servant, transport, uniform, research, helper, or movie allowance, whatever allowance you get, your first nature should be take it and add it first. So you will add all allowances. Yes. Next, follow this line. HRA can demotivate, hurt heartbeat. Follow this line for everything to do in allowances. This one line will help you with the entire allowance. Guys, this line says that whatever allowances you get, first add it, and if they belong to this line, then congratulations, this line is called the exemption line. So this line, if it belongs to, they will get an exemption. Let's check. You get an allowance of 2 lakh rupees for house rent. So what are you getting? House rent allowance. How much is it? 2 lakh. What do you do? First add it. But does it belong to this line? Yes, it belongs to this line, HRA. So will you get an exemption? Yes, you will get an exemption. Guys, exemption is under section 10, you already know that, and the house number is 13A. If you can remember it, section 10 13A, you get an exemption for HRA. What is it? It is least of the following. We've just done something similar, so I'm just going to do the calculation here. HRA exemption is least of the following: 1, 2 and 3. A, it is basically the amount that you receive. So you've received 2 lakhs, so it can be 2 lakh. Wow, that will be great. Or B, rent paid or payable minus 10% of salary. So whatever rent you're paying, because house rent allowance is given to you so that you can take a house on rent. So whatever rent is paid or payable by you minus 10% of salary. Salary, you know, is BDC. Guys, everywhere salary for calculation purposes is BDC. And C, it is 40% of salary. Again, salary is BDC, but 40% is for other cities. If you're in the metro cities of Mumbai, Delhi, Chennai and Calcutta, only 4 metros, yes, then it can be 50% of salary. Let's say amount received is 2 lakh. Let's say you're paying a rent of 3 lakh 60 and 10% of salary is 1 lakh. So this is 2 lakh 60 and 40% of your salary is, let's say, 4 lakh. So whichever is least will be taken here. Alright, so I hope you understand that this is least of the following, and whatever is the least of the following will be taken here. Let's assume, guys, here I'm not going to take the entire thing because it will spoil the show. So 1,40,000 is the exemption. So will you be taxed? Yes, but only on 60,000. In which head will you tax? Of course, you're an employee, so you will be taxed under the head salaries. Guys, is there a condition to get this exemption? Yes, you have to take a house on rent. It can be from your parents also, but you have to take a house on rent. This is a condition for HRA. What if I get allowance but I don't take a house on rent? Then the amount of exemption will be 0. Just 1 second. Perfect. So this is HRA exemption. The first one is done. This is the difficult one. The next one is very, very simple, guys. The next one, conveyance allowance. Conveyance allowance is basically for your traveling, for your office traveling. The employer gives you an allowance. This is C, conveyance allowance. What do? You add it. Let's say you get 10,000 rupees conveyance allowance. You add it, yes. And do you get an exemption? Yes. Whatever amount you spend for office purposes, let's say you spend 8,000, then 8,000. What if you spend 10,000, then 10,000? What if you spend 12,000? Guys, exemption cannot be more than the income, so maximum 10,000. So whatever amount you spent. Next, guys, allowance is daily allowance. Basically, for all your daily small things in offices, you get an allowance, daily allowance. And for the daily allowance also, guys, same to same. Amount that you get, you add. Amount that you spend, you get a deduction. Next, helper allowance, uniform allowance, research allowance, and tour and transfer allowance. Let me explain, guys, so that you can engage a office help, not house help, guys. So that you can engage a house help, you can get a helper allowance. So that you can wear a nice clothes in office, like a pilot has to wear a uniform, etc. You get a uniform allowance. So that you can do research, you get a research allowance. And so that you can go on tours, and when you're transferred, you can manage yourself. For these purposes, your master can give you allowances. What do you do with these allowances? You add. And what do you minus? Any amount that you spend, you minus. So basically, guys, from here to here can demotivate, hurt. This entire thing is added, and the exemption is the amount you spent. Yes, the amount you spent. So again, recapping, what are we trying to do? We are trying to do salaries. In that, there is allowance. Allowance is like pocket money. What do? You add it, and if it belongs to this exemption line, you will exempt it also. HRA is least of the three. If you give a house on rent, if you get a house on rent, can demotivate, hurt is basically the amount that you spend. That's the exemption you will get. And last is heartbeat, which I am looking at the next page for. So heartbeat, which H is capital and beat is capital. So these are 4 more allowances for which you'll get an exemption. Here, let's take the first one. Hostel allowance. But why are you staying in a hostel? You're supposed to be on a job, not your hostel, your children's hostel allowance. Whatever money you get, will you add it? Yes. And how much will you minus, or what is the exemption? The exemption will be 300 per month per child. So example, if you have only one child and throughout the year he's gone to a hostel, so 300 into 12 into 1. What if you have 2 children? Then 300 into 12 into 2. What if you have 3, 4, 5 children? Then maximum, guys, this exemption is given for maximum up to 2 children. Very low exemption, yes, guys, 300 rupees. No hostel will accommodate you for 300 rupees, and that too they say this is the maximum, because they are assuming what if you spend less than that, or what if you get less than that, then this is the maximum exemption you will get. So remember 300, remember maximum 2 children, and this add H is hostel. Next, I am taking E because E is similar. This is education allowance, but why do you need education allowance? This is not your education. Again, this is your children's education. Whatever allowance you get, will you add it first? Yes. And will you minus some exemption? Yes, you will get an exemption. Here it is 100 per month per child. Again, maximum 2 children. So let's repeat this one. Remember, 100 is for education, 300 for hostel. Here also 2 children, there also 2 children. Remember, this is the maximum. Again, very disappointing. I don't know which college or which school will give you education for 100 rupees per month per child. Is there a limit on the amount you can get? No guys, there is no limit of the amount you can get. Your employer or your master can give you how much ever allowance you want, but there's a limit on the exemption because the government can't afford to give you unlimited exemption. So that's the concept here. Next, A. A is area based allowance. Basically, you work in a difficult area, you work in the desert, or you work in an underground area in a mine. So you get some area based allowance. Who decides this? Your master will decide it, how much they want to pay you, and whatever is the area based allowance, you will add yes. And will you get an exemption? Yes, you will get an exemption, which is basically depends on certain figures. Example, for underground 800 per month, for desert area 200 per month. So it depends on place to place, and hence don't by heart it. The exam will tell you how much exemption you will get, and that depends on the area that you work in. Next, by the way, I forgot to tell you, when you have can, demotivate and hurt, this conveyance allowance is the amount you spent, but not from your office to home and back. Because the conveyance allowance, the amount you spend should be for office purposes. From your home to office and back is for your own purpose, and hence you cannot minus that amount spent. Next guys is B, for blind people, deaf people, mute people and handicapped people. Blind, deaf, mute and handicapped people, if they get an allowance for traveling, let's say they get 10,000 rupees per month, so into 12, that is 1,20,000. Will you add it? Yes. And will they get an exemption? Yes, the exemption will be 3,200 per month. So 3,200, it's flat. Yes. What if the amount they get is only 3,000 per month? Then it's 3,000 per month. 3,200 is the maximum. Yes, it's the maximum. And last is T. Why is T coming again? Because even Hurt had a T. That T was tours and transfers. Whenever you're going on tours and whenever you're going for a transfer of office. But this T is an employee who belongs to the transport sector. So this is transport sector employee allowance. Example, a pilot. Example, a air hostess, a train driver. These guys, because they're always on the move, they get an allowance, let's say 1 lakh rupees. Will they get an exemption? Yes. 10% of whatever they get, or 70,000, whichever is less. So 10% of whatever they get, or 70,000, whichever is less. This is the transport sector employee allowance. Anything else? Sorry, my bad. This is 10,000 per month, or 70%, whichever is less. So this is 10,000 per month, or 70%. Let's say 10,000 per month will be 1,20,000, and 70% of 1 lakh is 70,000. So 70,000 will be the exemption. Guys, just recapping this exemption on allowances: can, demotivate, hurt, heartbeat. HRA can do all this. So HRA is least of the following. In the exam, if you get minus exemption: conveyance, daily, helper, uniform, research, student transfer. Hostel children's, education of children, blind, deaf for their travel, area based allowance and transport sector allowance. All these allowances you will add, and then very nicely you will minus some exemption amount spent, or those fixed amounts. Heartbeat is already fixed, so hence fixed amounts here, and HRA is least of the following. Besides that guys, if you get any other allowance, example, the examiner gives you medical allowance, what do? You add it. What if the examiner gives you weekend allowance? What do? You add it, you tax it. Is there any exemption? No, because it does not belong to this exemption list. Now, so that means guys, in a nutshell, can I say your allowances are taxable? Yes, you can say allowances are taxable, but hearing this, 4 people got very angry. 2 judges got very angry and they left for UN abroad. So we told them, why are you angry? They said, how can you tax my allowances? We said, okay, don't get angry. We won't tax your allowances. For these people, whatever allowance you give is exempt. 2 judges, who are these 2 judges? Judges of High Court and Supreme Court, when they get compensatory allowances or sumptuary allowances. What are these allowances? Doesn't matter. That means to judges of High Court and Supreme Court, whatever allowance you give, 1 lakh, 10 lakh, whatever is exempt. Yes, fully exempt. To UN employees working in India, whatever allowance you get, fully exempt. And remember that friend of ours who's working in the Indian embassy in France, we gave him 7 allowances, those are also exempt. So these are completely exempt. Yes, they are very important people and we can't tax their allowances. This ends allowances. This ends allowances, guys. Now we are left with only one thing, that is perquisites. And once we finish perquisites, more or less our chapter will be over. Then we look at examination questions. Alright, so with that, guys, we come to the last part, which is perquisites or perks. I'm going to give you some shortcuts here, guys, for perquisites. There are lots and lots of perquisites, so I'm going to give you a shortcut for most perquisites. Guys, whether you get a servant at home, servant is a very derogatory word. Servant means house help, and your employer is paying for it. When you get gas, electricity, water in your house and your employer is paying for it. When you get a credit card and the employer is paying for your personal expenses on that credit card, and he's also paying for your credit card annual fees. When you get a club membership, congratulations, and even that membership is paid by your employer, then guys, are you benefiting? Yes. And is your employer paying for your benefit? Yes. So then this all will be added as a perquisite. Yes. Whatever he is paying will be added as a perquisite. If he is recovering some money from you, example, he gave you club membership for 1 lakh, but he recovered 10,000 from you, then of course your benefit is only 90,000. So any amount that is recovered can be reduced, yes, from this perquisite value. Gas, electricity, water, only one exception. If the employer who is giving you gas, electricity, water is the one who is actually manufacturing or producing the gas, electricity, water, then you will not take the market value of this, you will take the cost price. Then there are some allowances which are very peculiar. Example, any movable asset if you use of your employer. Any movable asset. Example, can you use the office furniture and can you bring it home? Yes. Can you take the office projector and can you get it home? Yes, why not? So if any movable asset which is provided by your employer, then in that case you take 10% of the original cost. Example, if you like the office projector and you get it home and you put it at home to watch IPL matches or to watch Netflix, then whatever the projector was bought, even if it was bought 10 years back, whatever it was bought, that original cost 10% per annum. So if you use it for 3 months, then divide it per annum for 3 months. So that will be the perquisite in your hands. Yes, taxable. Yes. But what if it's not owned? What if it's hired? Then whatever higher charges have been paid. Example, the projector was hired by your employer for 10,000 rupees a year and you're using it for the whole year, so 10,000 will be your perquisite, taxable in your hands. Yes, that is movable asset. But what if, so there are 3 exceptions to movable asset: laptop, mobile phones and journals. These, even if you're using the laptop which is for office purpose, even if you use for personal purposes, or mobile phone, even if you take your parents' call or your friends' calls, or your journals, office journals, then it's an exception. This is an exception. These are okay. There will be no perquisite in these 3 cases. What if you like the movable asset a lot what if you like the projector a lot and instead of just taking it home, you decide to buy it? Then the income tax act says that whatever is the depreciated value of the asset, let's say the projector's depreciated value is 80,000 rupees, and you buy it from your employer, the purchase price that you pay is only 1,000 rupees. Then guys, you got a 80,000 worth of projectors for 1,000, so that's 79,000 rupees will be a perquisite. How do you calculate this depreciated value? Obviously we know depreciation from PGBP, but no, the depreciation here is different. Here for this case, only for this case, the depreciation rates on motor cars is basically the depreciation rate on anything which has memory like computer, laptop, etc. is 50%. On motor car is 20%, and on others it is 10%. So basically they have only three rates. Yes, they have only three rates. First, any laptops, etc. with memory 50%, motor cars 20%, other assets 10%. The 50 and 20 is on WDV basis, and this 10% is on SLM basis. Keep that in mind. We'll use an example also to find out this. And remember, depreciation in PGBP is half year, full year. Here it is not like that. Here it is for completed number of years. So let's take an example. This projector was bought on the 12th of August 2020 for 1 lakh rupees. Today on the 17th of August 2022, you're buying it for 1,000 rupees. So let's calculate the depreciated value. First, what is the original value? 1 lakh. How many completed years? 2020 to 21 and 21 to 22. 2 completed years, so 2 years I have to apply depreciation. Is this laptop with a memory, etc.? No. Is this motor car? No. So 10% SLM, so 10,000 for 1 year and 10,000 for another year. So total value is 80,000. You are basically paying 1,000, so 79,000 is a perquisite value. So remember, rates changes. Yes, remember your calculation changes. It's not half year, more than half year. It is basically number of completed years. But from 12th August guys till 17th August, 5 days, nothing. Only for completed years you take depreciation. Alright. And next guys, I'm just looking at more and more perquisites. Guys, he can also give you a house, which is a very common perquisite, accommodation. If he gives you the house and the house is rented by him, basically it's not his house, he's rented it, then whatever rent he's paying, either that or 15% of your salary, either that, this or this will be taken, whichever is lower. So if he is giving you a house, let's say in Mumbai, then whatever is the rent that he is paying, either that, or of course this is taken on rent, or 15% of a salary, whichever is less, will be considered as accommodation value. Salary here is slightly different guys. Generally salary is BDC, but here salary includes everything which is monetary and taxable. Example, does it include S? Yes. Does it include A, allowances? Yes, only the taxable part. Example, what if you get travel allowance 10,000 and the amount you spent is 8,000, so then only 2,000 will be included here. And will it include perquisites? No, because perquisites is what you're calculating, so it will not include perquisites. Will it include all salaries? Yes, but any arrears of salary, that means previous year's salary which you're getting in this year, or any advance salary will not be included in this case of salary. So here the salary definition changes. Yes, it changes. Guys, what if he's providing you accommodation, but this time it's not rented out, so A is not there, it is owned? Then in that case it will be 15% of salary or 10% of salary or 7.5% depending on the population. More than 25 lakh population, 10 to 25 lakh population, more than 10, and up to 10 lakh population. This is how you will calculate. So the more populated the place is, the higher is the value of the house. Obviously guys, in crowded cities it's more expensive. So this is how you will calculate. Again, salary definition remains the same. But what if accommodation is provided in a guest house or in a hotel or in a service apartment, then in that case guys these are more expensive. But if this is provided when you are transferring from Mumbai, let's say, to Bangalore, then up to 15 days the Percocet value will be 0, so no Percocet for 15 days, we understand. And beyond 15 days, if it's beyond 15 days, then you'll have to calculate Percocet. How will you calculate? It'll either the rent paid for the hotel or 24% of salary, whichever is lower. So let me revise accommodation guys. Accommodation can be first rented. If it's rented, then whatever rent he's paying or 15% of salary, whichever is lower. Salary definition you know already right now. It's different from BDC, yes. Accommodation, if it's owned by them, then there is no rent, so A will go out. It's either 15, 10 or 7.5% depending on population of the salary. And if it's a guest house, hotel or service apartment, then for 15 days in transfer cases, nothing. If it's other than transfer, then 15 will not apply this exemption. And beyond 15 days, it is the rent or the charges, hotel charges which you pay or which the employer has paid, or 24% of your salary, because apartments are more expensive, service apartments, and hence 24%, whichever is lower. Guys, along with accommodation, if he gives you also furniture, furniture you already know is movable asset. So if it's on hire, then higher charges, and if it's owned, then 10% of original cost. We already seen furniture here with movable asset. So accommodation done, some servant, all this are done. Let's see what else is there in allowances, sorry, in perquisites. The next perquisite is a holiday, guys. Who doesn't like holidays? This one is the last perquisite that we'll do, then we'll take a question or two. Let's see, we'll break it up. But who doesn't like holidays? So you are taking a holiday along with your spouse and along with your children, and your master is paying for it. And this holiday, it's only about the travel which we are talking about. So he's paying for your travel, your spouse's travel, and your children's travel. Let's say he pays 10,000 rupees per person ticket to go to Kashmir and come back. So 4 people gone, 40,000 rupees. Should it be a perquisite? Definitely should be a perquisite. You are benefiting personally and he's paying for it, should be a perquisite. But the government says, listen, it's good to holiday sometimes. In a block of 4 years, it's good to go on 2 holidays at least. So hence, in a block of 2 years, if you go for 2 holidays, in a block of 4 years, if you go for 2 holidays, then whatever travel expenses he has paid for you will be exempted under a section called leave travel concession. So is this an exemption? Yes. How many times can I get this exemption? Twice in a block of 4 years. For how many people can I take my uncle, aunt, cousins, etc.? No, it is only given for self, spouse, and up to 2 children. What if I have twins first and I have another child? Then you knew the third child was coming, so hence the third child you will not get. What if I had the first child and then I had twins? Then you had no idea you were going to have twins. So then self, spouse, and all the 3 children you will get. So that's a one small thing that you have to take care of in case of twins and single child. This is basically for which kind of travel? Air travel, in economy class, train, bus, etc. in first class, no problem. That is what he can pay. This is only for travel, not for sightseeing, not for staying, only for travel. And this is only within India. You cannot go for a Europe holiday and he pays for it and you get a LTC. No, this is only for Indian holidays. Perfect. Is it compulsory for him to send you on holiday, guys? No, not at all. Lots of employers in India don't even pay this. Mostly it's the government who pays these kind of holiday perquisites. Guys, I'm not discussing motor car because honestly it's not important. It's just complicated. One day before the exam, it will just complicate it. So in the exam, if motor car comes and you've been using the motor car, it's a perquisite, yes. So then for the car, you take 10% of the original cost because it's a movable asset. For whatever driver's salary is paid, you take the driver's salary, and petrol and maintenance, whatever is paid, you take it actuals. This is if you're using it only for personal purposes. If you're using it for personal and office mix, then these amounts will be reduced by certain amounts. You can check it, depends on CC, but honestly not important and very complicated. Next, very important, guys, is medical perquisite. This one is very important, so let's discuss this in greater detail. Guys, medical facility or medical perquisite can be provided to you in India also and can be provided to you abroad also. So let's check one by one. First, let's start with India. Guys, in India, if they provide you medical perquisite, guys, medical perquisite means not money. they actually go and admit you in a hospital and they give you medical facility. So if they give you medical Percocet or medical facility in a government hospital or a self-run hospital, example, SpiceJet has SpiceJet hospital, Reliance has Reliance hospital in a self-run hospital, or in a commissioner approved hospital, then in these cases whatever benefit you get will not be taxed. This is exempted, yes. But if they provide this in a private hospital, then in that case whatever they pay for you, that will be taxable. Unfortunately for your health, you had to be traveling abroad for a treatment, and in that case the employer gives you a Percocet, so he makes you stay abroad, he makes you travel abroad, and he gets you treated abroad. Not just you, stay is also for one accompanying person, and so is travel. Government says very empathetic about it. Whatever is spent here will be exempt, will not be taxable. For travel, it will be exempt only if your GTI, not salary income, of your GTI overall is up to 2 lakh. That means you're slightly poor, and hence in this case only for them travel will be exempt, otherwise travel will be taxable. This is medical Percocet. We'll do one more, guys, which is basically Esops or sweat equity shares, which is popularly also called Esop. Now you start working in a startup called Zepto, and Zepto said we can't pay you too much money, but listen, we'll give you Esops. These Esops will become shares later on, so you have to subscribe to it, and we are giving you the opportunity to subscribe to it. The exercise price or the price that you can buy them for is rupees 55 only, and you decide to exercise it, and they are allotted to you in the year of allotment. Is that a Percocet? Yes. How will you calculate the Percocet? You will first calculate the fair market value. Let's say the fair market value, because these shares are not listed, will be an investment banker's fair market value, is 555 rupees, and the exercise price, how much you paid, is only 55 rupees. So you are getting a benefit of 500 into how many ever number of shares is your Percocet. Yes, it is your Percocet. It will be taxable in the year you get the shares allotted, not in the year you exercise. In the year you get the shares allotted. Next, medical facility done. Yes, guys, if you take a loan from your employer, can you take a loan, guys? Lots of companies have a policy that you get a very cheap loan from your employer. So if you get a loan, is that a benefit? Yes, that is a benefit. So first, if the loan is up to 20,000 rupees, aggregate loans that you've taken from your employer up to 20,000, then no Percocet. And if the loan is for medical purposes, then in that case no Percocet. So these two will not be any Percocet. But let's say you wanted to buy a car worth 10 lakh rupees, and for that you took a loan, will that be a benefit? Let's check. They will ask you how much was SBI charging you on the 1st of April of that year. So let's say SBI was charging you 10%. How much is your employer charging you? Only 1%, let's say, for example. So what is the benefit that you're making is 9%. This benefit into how many ever months? Let's say the whole year the loan was outstanding, so into 12 months this will be a Percocet. Yes. So repeating, amount is simple. This interest rate is SBI interest rate for that loan minus whatever he's charging into the number of months the loan has been outstanding. Alright, small loans no problem, medical purposes no problem. But medical purpose, guys, if we give you a 1 lakh rupee loan, no Percocet on it, no. But what if the insurance company gave you 60,000 rupees today on the 17th of August? Then it is your duty by the end of August to pay this amount back to the employer, because he's given you a loan. And if you don't pay, then on the 60,000 rupees from the start of August, you will have to pay interest, and that will be a Percocet. What else? Loan is done. Medical, education, guys, not your education, no problem. If you want to do an MBA and your employer sponsors it, master sponsors it, there is no Percocet, because it's going to benefit him only. But if your spouse or your children want to go for education and if your employer provides for it, then it's a Percocet. Yes, whatever he has paid for the college that you have chosen, it will be a Percocet. But what if you've not chosen the college or school, your employer has chosen, then we don't trust him. So then whatever is the cost of neighboring schools, that will be the Percocet. Same for a holiday. If you have gone for a holiday to Kashmir, or let's say to Kanyakumari, or let's say to Andaman Nicobar, and he makes you stay in Taj hotels, then whatever is the amount that he paid will be a Percocet. But what if you are working for Taj only, then do we believe the Taj hotels rate? No, we won't. We will see the cost of neighboring hotels. Alright, sweat equity done, this done, yes. And one more very common Percocet, guys. Any of your liability, if your master pays, Example, you had to pay professional tax, your master paid it. You had to pay some school fees, your master paid it. So any of your liability which your master pays, will that be a perquisite? Yes, that will be a perquisite. It will be added. Yes, it will be added. That's why professional tax is added if your master pays it, and then he will get a deduction also. Yes, you get a deduction as well. Guys, if you get tickets like air tickets, railway tickets, etc., will it be taxable? Yes, it will be taxable. LTC is an exemption, and if you work for airways or railways, then it's an exemption, then it will not be taxable. Lunch. If they provide you lunch during office hours, then what's the problem? You're in office, why can't they provide you lunch? Okay, but they cannot provide you a lavish lunch. Up to 50 rupees, no problem. Above that will be taxable. So if he provides you a lunch of 40 rupees, no problem. 50 rupees, no problem. 70 rupees, then that 20 will be taxable in your hands. Yes, in the hands of the employee. And what if he provides you outside working hours, then whatever he pays will be taxable. Or on holidays, whatever he pays is taxable. Gift up to 5,000 rupees per annum is no problem. Any gift above that will be fully taxable. Yes guys, two salaries are exceptions. Salary received by partners from a partnership firm will be under PGBP. If you remember, partners getting from partnership firm will be under PGBP, and MPs, MLAs, etc. getting salary will be under IFOS. These are two exceptions. Keyman insurance, guys. Keyman insurance, if the company gets money from the insurance policy, taxable under PGBP. If you take the policy with you and you get the money, then taxable under salary. And if a family gets the money, taxable under IFOS. Perfect. And last is retirement benefits, guys. I'm not going to go into details of retirement benefits, but I'm telling you what are retirement benefits. Guys, when you work in an organization for many years and you retire or you leave, then they want to reward you by paying you some gratuity. The reason why this is paid, because you work for many years in an organization, or they want to pay you some pension, or they want to pay you some leave salary. That means whatever leaves you have not taken, they'll convert into money and they'll pay you. Or they want to pay you some retrenchment compensation. Basically, when they fire you or they remove jobs, they have to pay you retrenchment compensation. Or they want to pay you voluntary retirement scheme money, which you saw in PGBP also, Delhi Development Authority. Or they want to pay some Provident Fund, or they want to pay some superannuation fund. Let's discuss very briefly, and I'll give you some very good shortcuts for this. First up, you can ignore superannuation fund. It's not important. Provident Fund, guys. There are three kinds of Provident Fund. SPF, that is Statutory Provident Fund. When your employer contributes to it, it is exempt. But you're benefiting, no? He's contributing to your account, still it is exempt. When you earn interest, again exempt. And when you withdraw this money, again exempt. Recognized Provident Fund. This is basically for non-government employees like KPMG, PwC, etc. Their employees will have RPF. Here also, when the employer contributes to the fund, it is exempt, but you are benefiting, still exempt, but only up to 12% of salary. When you earn interest, that is also exempt, yes, but only up to 9.5% of salary. And when you withdraw, again exempt, but only if the withdrawal is after 5 years. So repeating, guys, SPF, EEE, RPF, EEE, but with conditions: 12% of salary, 9.5% interest rate, and after 5 years withdrawal, only then it will be exempt. And last is URPF. In that, guys, no one knows where this Provident Fund is. It is probably a drawer in the office, and when the employer puts money in it, you are not taxed because you did not get the money. When he opens that drawer, puts interest also, you are not taxed because you did not get the money. And when you finally, he removes it from the drawer and he pays you when you leave the company, that time you are taxed, yes. But why no exemption last? Because the government did not get to use the money. In these two cases, the government gets to use the money, hence the exemption. Guys, now giving you a shortcut for all the other retirement benefits. Guys, any of the retirement benefit, if it is received during your employment, like you have a job today, yes, today you withdraw some gratuity or today you withdraw some leave salary. So if it's given during employment, then it is always taxable, always taxable. And if it is on retirement or leaving, then there are exemptions which you can read on your own. Guys, I'm not going to discuss it because never has a CA inter paper discussed this ever. So during employment it is always taxable, on retirement etc. it is exempted up to a certain amount. So it's better to get on retirement, yes. And for government employees, guys, surgeon loves government positions. Leave salary, gratuity, pension and SPF received by whom? By government employees. During employment, no. During employment for them also it's taxable. On retirement it is exempt. That's why surgeon loves government positions, because when you get some lump sum money from your leave salary, from your gratuity, from your pension, from your SPF, that lump sum money is exempt for government employees only if it was received on retirement or ending the association with that company. Alright guys, these are retirement benefits. This chapter is over. I am going to open up to only exam questions to give you two ideas. First, to see what kind of questions are asked, and to show you that this chapter is honestly a very, very mild chapter from an exam perspective. But first up, we've been in the lecture for about 1 hour 15 minutes. We'll take 5 minutes here. We'll come back and we will continue with salaries. Thank you. Alright, so looking at doing the exam questions from the salaries chapter. So here we go. It's going to be a laughing matter, guys, what kind of questions are asked in the exam from this. So this is the question bank. So on salaries there is no single one question, guys. So there are different questions. I'm going to take you to small parts of other questions which are from salary. Let me take you to the first question here. Yes. Salary income of Mrs. Daria computed. So nothing to do. Although there is salary, there is nothing to do there. Here, salary received by Shri Ram Kumar from a company 1,80,000 per annum, and Srimati Ram Kumar also doing a job in the company and getting salary of 2,40,000. Where will both these salaries go? Under salaries. And what will you do with these, guys? You will give a standard deduction of 50,000. That's all. Yes, that's all. Anandi's salary computed. Again, this is very simple. Income from salary again computed. So nothing to do here. Taxable salary income again computed. So nothing to do here. Income from salary again computed, nothing to do. All these are set of questions anyway. Now let's see computation of income sums. In that maybe there is salary. Yes. So let's calculate this, guys. From the following particulars of Sri Jagdish for the assessment year, required to find out his taxable income and net tax liability. Everyone focus here. And please open the door of salaries. Okay, salary door is open. Let's go inside. Let's take SAP and let's do SEP. Everyone watch. Basic salary 51,000 per month. Is it taxable? Yes, 51,000 into 12, which is 6,12,000 rupees will be taxable. DNS allowance 10,000 per month. Will this be taxable? Yes, 10,000 into 12, 1,20,000 will also be taxable. Yes. House rent allowance 4,000 per month. Will this also be taxable? Yes, 48,000 will be taxable. but you will get an exemption, and hence I have written it in the outer column, inner column here, 48,000. Now guys, there is no discussion on this. Only thing left is basically HRA exemption. We have to calculate the HRA exemption. Here we go. HRA exemption is least of the following: A, B or C. A is amount received, that is 48,000. B is rent paid minus 10% of salary. So first, what is the rent paid? 7,000 per month. So 7,000 into 12 is 84,000. And what is salary? BDC. B we have, that is 6,12,000. D is also for retirement benefits. So 6,12,000 plus 1,20,000, that is 7,32,000 into 10%, 73,200. So 84,000 minus 73,200 is 10,800. So this is the first number, this is the second number, and last, this is in Mumbai. So 50% of salary, so 7,32,000 into 50% is 3,66,000. Which is least, guys? 10,800 is least, so you will minus 10,800, and that, one second, and that 48,000 minus 10,800, this, guys, 37,200 will be your 37,200. So if you add these, this will be your room income from salaries. It will come out from the room. Where will it go? It will go to clubbing, it will go to set off, it will go to GTI. There will be deductions, there will be total income, and then you can calculate the tax. This is how simple, guys, salaries chapter comes from. Let's move ahead. Let's look at this one. Guys, here also she is working part-time with True Care Hospitals Private Limited. Her salary details are as under. So will we open the salaries room? Yes, salaries room is open. We have to do SAP and SEP. Basic pay is 13,000 per month. So 13,000 into 12 is 1,56,000 taxable. Yes, taxable. Transport allowance 2,000 per month. So 2,000 into 12, 24,000 taxable. Yes, but you get an amount spent, but they have not given any amount spent. So the entire 24,000 will be taxable. Yes. Total is 15,000, which is perfect. Next, during the year, her son had undergone medical treatment in True Care Hospital Private Limited free of cost. Guys, are you getting a benefit from a hospital? Yes. And is that a Percocet? Yes. But guys, I told you medical facility in India. I forgot to tell you the family's definition. The family is self, spouse, children, parents, grandparents and siblings only if they are dependent on you. Anyways, here, guys, the hospital would have charged 60,000, so you definitely got a benefit which is paid by your employer. So this is great, but this will be exempt in 3 cases. If it's a government hospital, if it's a commissioner approved hospital, or if it's a self-run hospital. Guys, this is a self-run hospital. She is working for True Cares only. So this is a self-run hospital, so this is exempt. So this much will be taxable, 1,56,000 plus 24,000, that is 1,80,000, that is SAP. Don't forget to minus 50,000 SEP, and your income from salary is 1,30,000. But wait a minute, guys, while we've done this calculation, she's done salary, she's taken it in PGBP, so will we remove it? Yes. From her profit of 8,59,000, they have added salary, we will minus 1,80,000. So we've removed salary. Remember, guys, if there is someone who's in the wrong room, remove him. Imagine, guys, you're having a party at home, all the parents are in one room, all the children are in one room, and so if the child goes in the parents' room, he'll be pulled out. Same way, salary has to be pulled out from here. It is added, so you will minus it, you will remove it, and then you will take salary, which is 1,30,000. All right. Conveyance allowance includes a sum of 12,000 incurred for conveyance from house to True Care hospitals and vice versa in relation to employment. Guys, can I minus this from my travel and allowance? No. From house to hospital and back, it's your personal expense, and this cannot be minus. For blind, deaf, dumb, even this can be minus, but for normal people, this cannot be minus because this is not traveling for office, this is traveling for your personal self. All right, Anything else in salary, nothing here also. Yes, he has shown salary income of 7,30,000 computed, so nothing guys. The moment they compute it, there is nothing to do. Yes, Rajesh was employed in Axis Limited, Mumbai. He received salary of 45,000 per month from 1st April to 20th September. Let's calculate April, May, June, July, August. 5 months complete. So 5 months into 45,000. And September only 20 days. So 20 days divided by 30 days into 45,000. This is his salary from Axis Bank, Mumbai. Because there is an India connection, it will be taxable. So 45,000 into 5, that is 2,25,000. And 45,000 divided by 30 into 20, which is 30,000. So this is his salary from Axis Bank, Mumbai, 2,55,000. Next, he left for Dubai on 28th September and got a monthly salary of rupee equivalent 90,000 from 1st October to 31st March. His salary for October to December was credited in Mumbai bank account, again received in Mumbai. So taxable, yes, October, November, December, 3 months salary into 90,000 will be taxable, that is 2,70,000. After that, his Dubai salary, will it be taxable or not, depends on his residential status guys. If he's a resident, then yes, it will be taxable. But if he's a non-resident, then it is received abroad, earned abroad, accruing abroad, then why will we tax it? So I know this question, this is a non-resident, so hence we are not going to tax his Dubai salary, which is received in Dubai. So this is the total salary, yes, 2,55,000 plus 2,70,000, which is basically 5,25,000. But this is only SAP, guys. Can I minus 50,000 SAP? Always, guys, do not forget, you can minus that. So 4,75,000 is his net salary or salary income. All right. Looking at other salary questions. That's about it. Guys, just want to tell you, pension, although this is received from Russian government, but any pension received is always taxable under the head salaries. Pension is connected to your job, and hence while you were in the job, you would get salary. After you left the job, you get pension. Even that is taxable under the head salaries only. So for that also, will you get a 50,000 rupee deduction? Yes. Alright, so that is on the salary front, guys. I honestly don't want to get into more details of salary. I have my quick book. Worst come, guys, if you want, you can just use the quick book to do retirement benefits also. One strict suggestion, guys, is do not get into salaries module. You will go crazy and there is nothing that will come from that module. Yes. So that is on this chapter. Now guys, what is left on the table are only 3 chapters. One is TDS, TCS Advanced Tax. One is Return of Income, which is very simple. And then there is a chapter called Computation of Income. Computation of Income, guys, is nothing. It's only the aggregation of all the chapters along with tax liability. So now guys, we will do some rates of tax. Yes, we will do some rates of tax, and then we'll see, but it's 1 hour 37 minutes, so we have about an hour. Let's try and do whatever rates of tax we could do. This I'm very comfortable doing tomorrow also, and we have day after tomorrow session also, so we have 2 good days to do this. So we have time on our hand. In fact, computation, we can actually solve a lot of questions, so we will do that. But right now I want to do rates of tax. Perfect. Guys, in rates of tax, I want to do 2 concepts. First, I'm explaining one concept on the screen. Guys, my total income is 51 lakh rupees. although I should be very happy about it, I'm not really in the mood for celebrating, because I know that just because of that 1 lakh rupee extra, I'm going to be subject to surcharge. You know guys, above 50 lakh, above 1 crore, above 2 crore, above 5 crore, there is a surcharge. So I wished I was making only 50 lakh, because just for that extra 1 lakh of income, I'll have to pay some surcharge. Let's see how this goes. Basic tax guys, up to 2.5 lakh rupees, it is 0. From 2.5 to 5, it is 12,500. From 5 to 10 lakh, it is 1 lakh. And from 10 lakh to 51 lakh on 41 lakh at the rate of 30% is 12 lakh 30,000. So this is your basic tax, yes, which is 13 lakh 42,500. I'm okay paying this. There is no problem in paying this. But on this, I'll have to pay a surcharge, which is 1,34,250, and I'm not happy paying this surcharge, because guys, I'm just earning 1 lakh rupee more from 50 lakhs. So to earn just 1 lakh rupee more, if I was at 50 lakh, I would pay no surcharge. But just 1 lakh rupee more, and I have to pay 34,250, 1,34,250 extra. This is not right. We went to the government complaining that this is not right. Your surcharge is a bogus surcharge, especially when you're earning a little more than the limits of 50 lakh, 1 crore, 2 crore, 5 crore. The government says, listen, I understand. So hence I feel bad for you, and hence I want to give you a relief. Relief means, will you not charge a surcharge only? No, I will still charge a surcharge. You will get a relief of how much ever extra you're paying. You're paying 34,250. I will give you a relief. How will you give me this relief? Calculate the relief and keep it. This is called marginal relief. Calculate it, keep it. Now after this, there is HEC of 4%. So 13,42,500 into 110% into 104%, that is 15,35,820 is my total tax payable. Yes. From this, please minus 34,250. That is, you will land up paying only 15,01,570. So this is a very simple concept, guys, but the calculation, where does it have to calculate it, that is important. So guys, when do you have to calculate the relief? The moment you calculate surcharge, stop and calculate the relief. So you will calculate the relief after the surcharge, yes, but when will you give the relief? After you finally calculate, then is when you give the relief. So this is what it is. Just let me check if this is the right concept. Yes, this is the relief concept. So this again, guys, will be useful when you are basically earning, let's say, 1 crore, 1 lakh and 500 or 5,000 rupees or 50,000 rupees. Even here, guys, you will get relief. How do I know I'll get relief? Until when I will get relief? Guys, you have to just check in the exam. First of all, marginal relief you'll have to calculate only when the exam question says calculate your tax liability. If the exam does not say calculate tax liability, then why do you want to calculate marginal relief? So first is this one Q. Second Q or second hint to calculate marginal relief is your income should be marginally higher than the last limit. Example, 50 lakh marginally higher, 1 crore marginally higher, 2 crore marginally higher, and that's when you have to calculate this relief. Honestly, this is mathematics. Yes, it's only mathematics, and hence in the exam I have not recently or I have not seen a marginal relief question in the exam yet. Alright, so this is marginal relief. Just checking what else is there in rates of tax that we could do. Alright, so this is marginal relief. Guys, the next one is an exam related thing. Guys, it has been asked before and it could be also there in your exam. Let's check the next one. The next one is something that will make people very sad. I'll show you what happens in this case. Guys, your electricity bill is only 1000 rupees, but you are very happy to pay only rupees 1000. But you hear a knock on your door and the electricity department says pay at least 3000 rupees. But why should I pay 3000? They say no, you have to pay. But what we will do is this 2000 extra that you've given us, we will give you as a credit which you can use later on. Next month also your bill was only 750 rupees, but they said no, you have to pay 1750. Why should I pay? They say pay, but we will give you 1000 rupees as a credit. So your total credits were 2000 rupees plus 1000, that is 3000 rupees. The next month your bill was very high, your bill was 5000 rupees. They asked you to pay 1750. You said, are you stupid? Why should I pay less? I have to pay 5000. So now can I use my credits? Yes. The same thing happens in tax also when you land up paying very low taxes. They say that if your total income, let's say this is your gross total income, let's say if you have SAT deductions. What kind of deductions? SAT deductions, that is specified business 35 AD, you know, this 100-bed hospital, that kind of deduction, or awesome area 10 AA deduction, or deductions under JJAA, QQB, RRB. 3 deductions, guys. I repeat, if you have any SAT deductions. What is SAT deductions? First, 35 AD. S is specified business 35 AD. What is A? A is for awesome area 10A, SEZ business deduction, or D is for deduction. But which kind of deductions? 3 deductions only. Join, return, Q. If you have these deductions, only if you have these 3, then this concept applies to you, which is called alternate minimum tax. So guys, why don't I use alternate minimum tax for most of my clients, or why don't you use it for most of your clients? Because not most of the people don't have SAT deductions. How many people do you know are in SEZs? How many people do you know who have specified businesses? So only if you have SAT deductions. So in the exam, can they ask this question? Very much, guys. Let's take one example. Let's say your business profits was 80 lakh rupees. But because you were in specified business, you got a huge deduction of, let's say, 70 lakh rupees. 100% deduction. So your total income was only 10 lakh. On this 10 lakh, this is your total income. After you got a 35 AD specified business, 100% deduction, 70 lakh. And let's say this was a 100-bed hospital. And your PGBP income was 80 lakh. You got a 35 AD deduction, 70 lakhs. So your total income is 10 lakh. Let's calculate tax, guys. 1,12,500 is a basic tax. Yes. Any surcharge? No, because your total income is not more than 50 lakh, 1 crore, etc. HEC and total. So 1,12,500 into 104% is 1,17,000. This is what is your tax payable. You are very happy to pay this tax. You are almost going to pay this tax when you heard a knock on your door. You heard a knock on your door, you opened the door, they said, listen, this is too low, can you pay a higher amount? You said, I don't want to. They said, you have to pay, and they calculated the higher amount. Let's say, what is the amount they calculated? They said, let's calculate your adjusted total income. How do you calculate your adjusted total income? Take the total income which you already have, which is 10 lakhs. Okay. How did you get such low total income? Because of a SAT deduction. So reverse the SAT deduction. Whatever SAT deduction you have taken, you reverse it. So whatever specified business deduction or 10A deduction or 80 JJA, QQB, RR deduction you've taken, you add it back. So I'm adding 70 lakhs back. But guys, if you take my 100% deduction back, at least you should give me depreciation. Okay, we'll give you depreciation. So 10 lakh plus 70 lakh minus 7 lakh is 73 lakhs. Yes. Is this my adjusted total income? Yes, this is my adjusted total income. Now what about that? On this they say calculate alternate minimum tax at 18.5%. Yes guys, you heard it right. So this is the calculation of alternate minimum tax. So I'll repeat, how do they calculate alternate minimum tax? First they find out ATI. What is ATI? They take your total income, which is whatever you've got, 10 lakhs. whatever SAT deductions you had got, they will add it back. Remember, SAT deduction, the shortcut is very, very nice. So they will add the SAT deduction. But of course, if they take back the 100% deduction, at least they have to give you depreciation. So that you'll minus, and they got the ATI of 73 lakh. On 73 lakh, 18.5%. So on 73 lakh, 18.5% is 13 lakh 50,500. This is the tax, yes. So no slab rates, flat 18.5%. Then surcharge, yes, because your ATI is more than 50 lakh rupees, so you'll be a surcharge of 10%. So into 10%, 1,35,050. So 73 lakh into 18.5% into 110% into 104%. Basically, you'll add HEC also, and finally you will get a number which is 15,44,972. You will round off, so this becomes 970. Now either you will pay this one or you will pay this one, whichever is higher. Guys, poor guy, this person, because he was almost going to pay only 1,17,000, but now because of alternate minimum tax he has to pay 15,44,970. But will he get at least a credit? Yes, of the extra amount that is paid, he'll get a credit. So he'll get credit of the balance, that is 14,27,970. But what is the problem? You're getting credit, no? But guys, first to pay is such a big deal. You have to pay such a big amount. The credit you can use, no problem. You have 15 years after this year to use the credit. Whenever your A is more than B, you can use the credit. Till the years your B is more than A, you'll keep paying and take credit, and whichever year your A is more than B, you can start using the credit, but credit expires in 15 years. For every year, 15 years. Next year's credit will get 15 more years. Next to next year's credit will get 15 more years. Guys, this is a concept of alternate minimum tax. Let's do a quick revision of how you will identify. Yes, will they get a refund? No, they will not get a refund. At the end, it will disappear. Alright. Guys, let's do a quick recap of what is alternate minimum tax. Alternate minimum tax in the exam, how will you identify it? You will only think of AMT when you are SAD. That means if you don't have SAD deductions, don't even think about AMT. What is SAD? A specified deduction, specified business deduction, 10A deduction, or deduction under J, Q and R. If you have that, first calculator tax, normally your normal tax after doing all the deduction is 1,17,000. There is no change in that, no change in that. But then you have to do AMT. How do you calculate that? Take your total income, whatever made you SAD, reverse it. So if you got any deduction in SAD, reverse it. But if it's specified business reversal, then minus the depreciation at least. You get ATI. From the ATI, you get 18.5%. Is that fixed? Yes. In centers, guys, there is a center called IFSC, International Financial Service Center. If you are located there, then the 18.5% becomes 9%. But that is more of a CA final concept. Then you add surcharge. What surcharge, guys? Same surcharge like before. More than 50 lakh, more than 1 crore, more than 2 crore, more than 5 crore. And if you add HEC also, and then what is B? If B is more than A, you pay B and you take the credit. Guys, this alternate minimum tax applicable for everyone. Yes, everyone except companies. So this is applicable to everyone except to companies. Companies will not follow this. And guys, will this make you cry? Are you sad? Will it make you cry? Yes. So just cry. 115JC is the shortcut. We developed the shortcut recently in a batch, and the student suggested the shortcut, guys. 115JC is just cry. Perfect. So that is 115JC, just cry. It's applicable to everyone. But by the way, it is applicable only to big fish. What do I mean by big fish? Big fish is basically when your adjusted total income is more than 20 lakhs. So guys, this applies to everyone, yes, but only for big fish. That means your adjusted total income should be more than 20 lakh, except for partnership firms. For partnership firms, even if it's less than 20 lakh, you will apply. So this big fish concept does not apply to partnership firms. So again, repeating, 115JC is only for everyone except companies. Only if you are big fish, that means your ATI is more than 20 lakh. And it is not applicable, this big fish concept is not applicable to partnership firm. So partnership firm, even if the ATI is 2 lakhs, you will apply this concept, yes. Perfect. So that's another rate of tax thing. Honestly, guys, every third session, an academy has asked us to keep it open for questions. So this one also happens to be one of those QR doubt solving sessions. So now what we will do is, of course we have time, but I'm going to open up for any question that you have. Guys, any concept that you're finding difficult in tax, anything that you're stuck at, anything that you want to ask, this is a perfect time. I don't want to push now. TDS tomorrow, TCS Advanced Tax chapter tomorrow, Return of Income chapter tomorrow, very small chapter anyways, and computation of income tomorrow, rates of tax 115, BAC, all that tomorrow, and day after tomorrow is a day where we just solve and do amendments. Perfect. Thank you. If you have any questions right here, guys, not ending the session, I am here for the next 26 or 25 minutes and 56 seconds. Any questions? I am right here for any of them. Thank you. Also, in the meanwhile, I'm just uploading something. Thank you, Venkat. Thank you, guys. Just uploading a small question. This question, guys, is on 115, is on AMT, alternate minimum tax. Guys, this is the question which is on alternate minimum tax. So what you could do is try and have a look at this question. They've written here, compute the income tax including AMT under 115 JC payable by Mr. Xavier. In the end, I'll show you the solution also after you finish trying. This is a 6-mark question. Try it on your own and then we'll discuss. You get 10 minutes about for this. If you are here and you want to try, this is a good question to try.